Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by. Hey, great to see you on another one. Thanks for coming back to Premier Study in Investing. We really appreciate it. Been nice chatting with you guys. Congrats to the gentleman who was buying at $25. Definitely a 16% gain after just recently chatting with you. So well done. We are here at May the 6th, one day after Cinco de Mayo. We're looking at Moderna, which had an earnings report last Friday. It was top line and bottom line beat, which we'll pull up right here. So we're trading at $27 and some change today. May 1st was their earning report for Q1. Had a 19% beat on EPS, so still negative $2.52. But analysts, at least according to this average, was negative $3.11. So good beat on EPS. Some cost cutting was caught a lot of headlines. And then revenue, barely 1.7% beat. So, but hey, top and bottom line beat. I didn't really listen to the investor report until I just went over the transcript today. So it's been, I guess we were able to watch trading on Friday because earnings came out in the morning, and then also on Monday. So yesterday, today's Tuesday, and then as well as today. The stock has not really done so well. We've been down as low as 5% after earnings. So we're up at 28 and some change. Now we're at 27, low 27s. I'm going to look at the same thing I always do, and then I'm going to get you to some stories that I think are really important, including a potential change in requirements for new vaccines from the CDC. I think that's the big story. And Michael Yee from Jefferies gave a great question. I thought if he only got one, he was going to ask about that change, which he did in the earnings report Q&A on the call. And we'll look at what that has to say, as well as something from Dr. Bean, Dr. Mobeen Saeed. So just new highlights. Book per share is now 26.01, so dropped a little bit, cut into their assets, which means with book value per share at 26.01, we're at 27 something. We're now back trading at positive multiple of book, which, okay, whatever that means. And then cash per share has dropped. It was 16, I believe, something, and now we're at $15.45. The other thing I always like to look at is the short float here. You can see it's now 16.48%. So shorts are continuing to become more and more popular. The rest of the stuff you can see on the screen. One quick look at insider trading volume. Nothing really of interest since this oddity that happened in March with Stefan Bonsell and Paul Sagan buying up those shares, which we've talked about in the past. One quick thing back to the chart. Nice. So if we look here at the monthly chart going back, I just want to remind everybody the next section we're going to be looking at is potential approvals. We've been kind of waiting for some things to happen at the end of May. This is May 6th, so that's not far away, as well as early June, 2 products. We'll look at that in a second. But I just want to remind you going back, when RSV for older adults was approved, we went from something like $100 a share to $165-ish. So 60% run up. The market got really carried away there because RSV hasn't really materialized into a lot of revenue. But that's the thing with pharma, especially biopharma stocks, is if you get an approval, you never know what the market is going to do. So I've had to really sort of bite my tongue. I've been tempted to say the stock will not see prices over $30 for the rest of 2025. How can I say that? That's a bold call. That could very easily be wrong. And so we'll see how long that's true. But I think let's look at the investor report and see what the big potential good news is. So I'm here. This is the Q1 presentation. So this is the respiratory vaccine portfolio, and you can see next-gen COVID-19 MRNA, it's 1283. You may be a little bit not even sure what is the next gen, how is it different than the original. I'll give you a resource for that, and we'll look at one slide from some slides that the CDC put out. Okay, so PDUFA May 31st on this one, so that's just later this month, and then 2 weeks, let's say, after that, you also have the RSV for 18 to 59-year-olds. So those are both like very near-term things. This one we were told, this flu and COVID combo for over 50-year-olds, got pushed back. They needed to get some vaccine efficacy data from the FDA, and so now that's not going to be happening until maybe 2026. So as far as the flu vaccine, there is, I believe, some question on this related to a change in regulatory standards, but we could have interim data readout in the summer 2025. Those are the only good news pieces that I think we should expect for the rest of this year. And so let's go and find out what is a PDUFA before I move on to some of these other things. It says a PDUFA, Prescription Drug User Fee Act date, is a target deadline set by the FDA for reviewing a new drug application, an NDA, or biologics license application, a BLA, and making a decision on whether to approve the drug for marketing. The FDA typically has 10 months to review a new drug application, but this can be reduced to 6 months if the drug is granted priority review. And so, well, that's important. So we are basically expecting on these two items here, essentially approval for marketing. So next gen COVID and RSV for 18 to 59-year-olds. Okay. So big news, big news. And like I said, you have no idea what could happen. A 60% run up, I guess, is definitely possible. So something to factor in. Now, one other thing that I mentioned in my last quarter review was there was a clinical hold on neurovirus. Okay, so related to their hold that they had previously on their neurovirus study, it went on hold because some people had Guillain-Barré syndrome. So they say what you can do, though, is characterize the frequency of these things and make sure that people are aware of them. As part of our ongoing phase 3 neurovirus study, we'll continue to very actively monitor for additional cases of GBS, Guillain-Barré syndrome. It's the facial paralysis thing. Temporary. No, it can't be temporary, I think. We certainly hope we don't see any either on the placebo arm 1. But all of that, we're pretty encouraged again just to be off clinical hold and moving forward with enrollment and hopefully moving forward with that program. So the hold has been lifted on that. So that's interesting news. Not for 2025, but for the future. Interesting. And it relates to what is the value of the shares worth, right? It's the sum of the parts. Now, the other thing to know is that I ask, is Moderna RSV trial for children paused? On July 17th, Moderna stopped vaccination trial enrollment and notified the FDA and Data and Safety Monitoring Board. Trial participants are still being monitored. A Moderna representative said additional data will be gathered. There are no plans, however, to restart the trial in children younger than 2 years old. That was of December 12th, 2024. Now, I think a huge kicker is this article from CNN. Headline reads, HHS to require placebo testing of, quote, all new vaccines, end quote, raising questions about approval of updated COVID-19 shots. This came out April 30th, 2025. And this was, I believe, the article that the analyst from Jefferies asked about. So we'll get the answer. But going down to the opening paragraph, the U.S. Department of Health and Human Services said it will require that all new vaccines be tested in placebo-controlled trials before they're licensed for use, raising urgent questions about the system used to clear updated COVID-19 boosters each respiratory virus season. They have a quote, under Secretary Kennedy's leadership, all new vaccines will undergo safety testing in placebo-controlled trials prior to licensure, a radical departure from past practices, HHS said in a statement Wednesday. I mean, that's a big deal, I think. Going down further, we want some more clarity. How does that apply to these boosters and these updates? The spokesperson for HHS didn't immediately respond to an inquiry about whether the new guidance pertains to updated COVID-19 vaccines, but an official told CNN on Saturday that, quote, the COVID vaccines, including new ones by Pfizer and Moderna, are new and must have more gold standard science to ensure safety and efficacy for the public, end quote. Okay, wow. So the question becomes, could that apply to this next-gen COVID, RSV, flu and COVID combo? Flu is in a different category, it said. So I think the best place that we're going to be able to find some insights for that question is based on the answer that we got from Michael Yee's question. He is an analyst for Jefferies. Here's the question. It says, this is Diana on for Mike. Just a quick question about a recent media article that came out yesterday regarding how vaccine trials would be run and that they would now require to be run against placebo. Just want to get your thoughts about that. What do you think that will do to enrollment? Will it be harder? Enroll? Easier? And is that going to be required, do you think, for all respiratory vaccines, specifically covered for you guys, or just new vaccines such as cytomegalovirus or any others that you're working on in the product line? So Stephen Hodge takes the question. He says, thank you for the question. I would say, comment on a policy change that either hasn't happened or that we haven't been communicated directly to us. I'm reading it as the transcript is written out. I'm sure there are some technical difficulties in the sound to text translation, but he says, I will note, as you did, our COVID vaccine, our RSV vaccine, our cytomegalovirus vaccine, our neuro vaccine, these are all conducted as placebo-controlled studies. And for many of the other products in our pipeline, there are portions of their development that happened in placebo-controlled studies, usually earlier clinical development or in certain populations. For instance, our COVID vaccine was studied in children in a placebo-controlled context. So it will really depend upon ultimately what the FDA and the HHS feel is appropriate for their guidance at a program level of what that will require. Our responsibility as manufacturing and a drug developer is to make sure we provide the data that regulators and public health officials feel they need so that they can stand behind our products. And so we will. We will absolutely engage constructively in making sure we understand what those needs are and that we fulfill them. Okay, well, sounds like a big change to me. Like I said, I should say this before, I shouldn't really make these videos. I could try to make these videos non-biased, but truth be told, I'm not short. I think there's a potential of a crazy run-up, but ultimately I think that there's real safety control problems that we've known about for a long time with mRNA tech, and so therefore I'm net short. I should just say that. So I think that's interesting. Also, if you didn't know, Novavax had a COVID-19 vaccine that was not approved. I'm not sure what all the details are on that, but they were expecting to hear from the FDA with some sort of approval, and I think that has kind of shocked the whole vaccine developer community. So, for example, there was a question that came in from Tyler Van Buren. Just at the risk of being repetitive here, he says, and just to be more clear, more specific, given how close we are to the PD UFA, it's business as usual for the 1283 review. This is the next-gen COVID shot. Can you talk about how interactions are going for that program and where your confidence is in the approval given the new leadership and recent denial of the Novavax program? So it was apparently denied. Okay, so the CDC has this really interesting number of PDFs that they put up on this website here about COVID vaccines and what they're planning on doing in the future. And I basically learned about this from this Dr. Bean Medical Lectures video. It's pretty long, where basically this gentleman, Paul, what's his name? B-O-R-K, covers basically all the slides. He went through them a lot. And really, he sort of just kind of... he's not happy with some of the errors and the typos. He's not happy that significant digits were left out on reports. He even said that leaving out significant digits is kind of like a freshman year engineering college mistake, not acceptable for FDA, CDC, but talk about old data and a lot of different things. You can go here and basically he'll cover it for you. It's called CDC is cogitating on COVID vaccines. Cogitating is something like thinking about is what he says. So I don't expect that there's really the political will to say this is an unsafe product and say all-cause mortality is elevated since the rollout and that we're just going to lock, stock, and barrel pull these products until we can do a full restudy, but I think it's more reasonable that there would be something to come out more like this from RFK Jr. So, I don't know. But I will pull one slide out of all the slides. So we're looking at study 301, safety set. Similar frequency of unsolicited adverse events within 28 days after injection, regardless of relationship to vaccine between the mRNA 1283 and Spikevax. So it's the next gen versus the original that got approval. And I guess one thing to notice is that the idea is Spikevax gave 50 micrograms versus this new one, this next gen will have only 10 micrograms. But I thought the thing that they made a good point of and that stood out to me is that if we go down to here to what percentage of people that took these products are having adverse events within 28 days after injection that are medically attended. So these are fairly serious. You need to seek some sort of medical attention. And it's 7% for Spikevax and still 7% for the next gen product. Which to me, I don't know. I've never been in medical regulatory environment. I'm not sure what passes as gold standard. To me, that sounds high. Definitely to the presenters. Paul Bork, he thought that was high. That sounded high to me. I would not expect 7 out of 100 people needing to seek some kind of medically attenuated adverse event. That doesn't sound good. So you can go and look. There's a lot of different slides and all kinds of things that were covered. Center for Disease Control and Prevention. So it was a CDC event, Agenda Advisory Committee on Immunization Practices. And so they were covering, actually this is sort of interesting. They're talking about Mpox, Lyme, influenza, COVID, pneumococcal vaccines, HPV, cytomegalovirus, measles, and what are they doing in the afternoon or the next day? Meningococcal vaccines, RSV. Here's something I've never heard of. I'm not even going to try to say it. Chikungunya vaccines. So, again, RSV for pediatric or pregnant women, I suppose. So I think that's my basic take, which is we had top line, bottom line beat. Let's talk about cost cutting. There's talk about break even in 2028. Looks like they're going to blow through about $9 of cash per share, or cumulative losses in 2025 would be like negative EPS of somewhere around $9 per share based on my calculations. And now we're down 6.65%. We're back to $25.99. It's just hard for me to really know what to think. So I'm not really changing my overall strategy. I'm still basically having something like a straddle strategy where mostly I have a largest position in puts because I think this is going to continue to run into problems. Interest rates are still pretty high. I think if interest rates drop significantly, you're going to have a huge run up in asset prices. So that's how do you see the macroeconomic environment? What's the Fed saying? I think there's something like 50 basis points of cuts planned for 2025. It could be as high as 75 basis points of cuts. And we did have negative GDP print Q1, sorry. So a small shrinkage in the United States GDP. We have a trade war or tariffs or all kinds of stuff. How is that going to affect exports, retaliatory tariffs? Yeah. I don't know. I think I read that Moderna says that they are able to source all of their input materials in Massachusetts. So no big deal as far as tariffs on input costs or input products. But, you're watching this even as I'm talking here. Now we're down 7.37%. There have been a lot of buyers at $23, $24. You can make 15, 16%, I suppose, on some of these short rallies. And I'm not sure what the S&P 500 is doing today. I think it's slightly down. But I mean, it's not a pretty picture to go from maybe $28 or $29 a share. I think we're as high as $28 in the last week to be, be down pretty significantly. 10, I don't know what that is, 10, 11% maybe. So I don't know that the market's buying it, but all you need is one rally. I mean, all you need is one approval. And typically computers buy this thing, algorithmic trading. So I really feel like anything could happen. I feel like it makes it either, I'm not going to give advice. I have no idea what's going to happen in the future, but we do know that they're a long way away from break even. We know that asset values tend to rally if there is a huge cut in interest rates, assuming that people don't get too scared, right? If it's a gradual cut in interest rates over the next year, that would be good for asset prices. We had some delays in the pipeline. We have two big events here, basically in late May and early June, and then after that, there's nothing. So this is kind of the 3-week window of pipeline opportunity. Otherwise, I think the rest of 2026, nothing great is going to happen positive for this company. Maybe interim data, but I don't see anything really great happening. If we chop another $9 off of, let's say we chop another $8 off book value, we'll be at, was that $18? And let's say we trade about at book, I think we're at $18 at the end of the year, just based on fundamentals, kind of how this thing has been trading. So that's what I think. Will it get back over 30 in 2025? I mean, definitely not if I definitely can't see any way it gets over $30 a share if they do not get approval on either the next gen product, which, like I said, these guys really took to task, or the other one is the RSV for adults. I think these are high risk adults that are between the ages of 18 and 59. So they do talk about what they're defining as high risk, and it's not very hard to be in the high risk category when you go through some of these slides. Or like I said, you can just watch this video. Dr. Mobeen Saeed, Medical Lectures. Okay, well, thank you so much for joining me. Great to hear what your thoughts are. Hope you find a way to make money. That's the plan. Obviously, this is mostly held by institutions. And I think always the advantage of retail is that we are not making these huge transactions or these huge moves with billions of dollars of assets under management. And if we want to make an allocation to this, it's like a ton of shares. It's just like a huge pile of shares we can buy in and out, small amounts. We're not moving the markets. We can maybe use that to our advantage. What was the institutional holding? 67.9% institutional holding or owned. All right. Well, thanks so much. I think I don't have anything better than that for you. Good job on revenue. Good job on earnings beats, and tough stuff on the stock price, honestly. 7% down today. All right. Thanks so much. We'll talk to you next time.